Good day to you, students. How are you this morning? Going to teach you a conventional method of presenting a final account of a limited liability company. And this conventional method or conventional format is what we all know as the traditional method or traditional format of final account of a limited liability company. And the final accounts of a limited liability company include the following: trading accounts, profit and loss accounts, appropriation accounts, and the last but not the least is balance sheet. All these accounts are very important. In fact, they are interlinked. So in this case, that means once we get gross profit in trading accounts, the gross profit will be taken to the gross profit to the profit and loss account. And why? That will help us to get our net profit. Once we get our net profit in the profit and loss account, it will allow us to take it to appropriation account. And once we take that net profit to the appropriation account, that will enable us to know our retained profit, and which will be carried forward for next year. And that will also help us to balance our balance sheets, or to make our balance sheet to be total to be equal. So that is very important. So that means all these accounts are very important and they are interlinked. And then we'll start with the trading account. As you all know, the trading accounts, I always tell students to start with the credit side of the trading account, because that one is easier compared to the debit side of the trading account. The essence of the credit side of the trading account is to know the total sales or the net sales. So it's easier to get either of the two when you want to start or when you want to do your trading account. Now, the first item, which is usually given in questions, is sales. Sales will be credited in your trading account, and if you are given returns inwards, or what we call sales returns, that will be subtracted from the sales to get you net sales, or what we call turnover. And that is temporarily, we are going to temporarily suspend this side of the trading account. So we'll come back to that later. So we have been able to get the net sales or the turnover. Now, coming to the debit side of the trading account, we usually start with opening stock, which is usually given in the question, and is usually found in inside the trial balance. Opening stock is usually found inside the trial balance, so it's going to be on the debit side. So we're going to place the figure on the second naira sign, under the second naira column. So followed by purchases. Purchases, we don't have carriage inwards, and we don't have returns outwards. Let's say we don't have carriage inwards and returns outwards. That means our purchases, the value will be under the opening stock, which will be added together to the opening stock to get us our cost of goods available for sale. But because we have carriage inwards, so in this case you need to add your carriage inwards to your purchases to get you what we call total purchases. And then returns outwards will be subtracted, which or returns outwards, is otherwise known as purchases returns, which will be subtracted from the total purchases to get you the net purchases. This value called net purchases will be transferred to the next column where you have the opening stock. Then you add your opening stock and your net purchases together to give you cost of goods available for sale. Then from there you subtract the closing stock from the cost of goods available for sale. Closing stock is usually given outside the trial balance, or better still, inside. It's usually given inside the additional information. But remember that the closing stock of a year is the opening stock of the following year, and while the opening stock of a year is the closing stock of the previous year. Note that. Now we have cost of. After that, once you subtract closing stock from the cost of goods available for sale, you will get your cost of goods sold. That is that. Now, in this case, but the issue is that whenever we have wages, the word wages alone without salaries, it's not like wages and salaries, but I'm talking about wages. That the wages will be will be added to the cost of goods sold to get another cost of goods sold, or better still, to differentiate it, we can call it cost of sales, but they mean the same thing. Cost of goods sold and cost of sales mean the same thing. So now we have gotten our cost of sales. Then this our cost of sales will be compared to our net sales. If the net sales is more than the cost of sales, then our balancing figure will be under the cost of sales, which will be added to the cost of sales to get the same total we have on the credit side of the trading account. And that balancing figure, we call it gross profit carried down, or CD. So that will be the end of of the trading account here. Then when we come to the profit and loss account, the profit and loss account, the first item that is entered in the profit and loss account is called gross profit BD, and that is found on the debit side of the trading account, which will be brought down on the credit side of the profit and loss account by applying the principle of double entry system. And in doing this, you add up all your incomes together. The income such as discounts received, bank interest received, reduction in provision for bad debts will be credited. Commission received, profit on sales of assets, recovery of bad debts, rents received, income from quoted investments, income from unquoted investments, interest received. All these will be added together to give us what we call total income. The quoted investments, let me talk about it a little bit. Quoted investments are the securities, such as the shares and the debentures, such as the shares, particularly the shares of limited liability companies that are listed on the floor of the stock exchange market. They are to be traded publicly. That's why they call them quoted investments. That means the quoted investments are peculiar to public limited liability companies, and while unquoted investments are the securities not traded not listed on the floor of the stock exchange market or on the recognized stock market. And as a result of that, such kind of investments cannot be publicly traded. And as a result of that, we can say unquoted investments is peculiar to private limited liability companies. And that is the end of the word of the credit side of the word of the profit and loss account. So we'll come back to that later. Then on the debit side of the profit and loss account, you have the wages and salaries. Whenever you are given the word wages and salaries, it will be on the debit side of the P&L, that is of the profit and loss account. And why, if you are given only salaries alone, surely it's going to come over to the debit side of the P&L account. But remember what I said in the trading account. If wages and salaries are given separately, they are given two different figures. That means wages will be in the trading account, which is to be added to the cost of goods sold to get another cost of goods sold. And why that salaries that is given separately from wages will go to the debit side of the P&L account. Then if there is increase in the provision for doubtful debt, surely it will be on the debit side of the P&L account. Then you list out other expenses like the telephone, the insurance, electricity, carriage outwards, bad debts, depreciation of fixed assets, motor expenses, general expenses, stationery, interest on loan, bank charges, loss on sales of assets, advertisement, repairs, postages, lighting and heating, rent and rate, discount allowed, director's fee or remuneration, auditor's remuneration, debenture interest. All these will be on the debit side of the P&L account of a limited liability company. Actually, there are so many things I would have loved to say, especially the treatment of accruals and prepayments, the treatment of bad debt, the treatment of depreciation, the treatment of provision for depreciation, and other things that may be given in the additional information. But time may not permit me to do that right now. So once you get once you place all the expenses here, then you add up all the expenses together to get your total expenses. And your total expenses will be compared with the total income. And if the total income is greater than the total expenses, then you get your net profit as net profit. And why, if your total expenses is more than your total income, you get your net loss, and your net loss will be under your total income. Then you will balance it, put, and remember, in the time past, in final account or in profit and loss account of a sole trading business, of a sole trading organization, whenever we get the net profit, we will usually write net profit, and that is it. But because there is an extension of this profit and loss account in a limited liability company, leading us to appropriation accounts. So because we need this net profit elsewhere, that is the reason why we need to put our net profit CD here. So when we put our net profit here, then the same net profit CD that we put here will be taken to this place. As you can see, net profit brought down. But before you write this net profit brought down, because this net profit is the net profit of this operating year, of this current year, then before you write that, you need to look for any retained profits from last year or undistributed profits from last year, or what we called plug back profits from last year. These will be what you write here before the net profit BD. And that is all for the credit side of the appropriation account. We only have two items in the appropriation account of a limited liability company that I can think of, and that is the retained profit from last year or undistributed profit from last year, and why that of what of the net profit of the current year, which is brought down from the debit side of the profit and loss account. Good. Now the debit side of the appropriation account now. Corporation tax. Corporation tax. I'm going to tell you a few things about corporation tax. Every business organization, every limited liability company is expected to pay corporation tax, or what we call company tax, or sometimes we call it, or mostly called, profit tax to the government. And this corporation tax may be given if it is only given in the trial balance. That is, you only find it. Let's assume that you only see it in the trial balance. What step will you do, or will you apply? The step you do is that corporation tax that's given in the trial balance will only be posted to the debit side of the appropriation account of a limited liability company, and that is all. But if the corporation tax is what is given both is given only in the additional information, only in the additional information now, what will you do? That same corporation tax that's given only in the additional information will be debited to the profit and loss appropriation account of a limited liability company, as you can see, and the same amount of money representing the corporation tax given in the additional information will be posted to the current liabilities in the balance sheet. As you can see, let me show you the balance sheet. As you can see, taxation. So that is that. So now let's move over. Now, general reserves. General reserves and revenue reserves, they are together. Remember the reserves. Reserves are divided into two categories, where we have the revenue reserves and the capital reserves. And the revenue reserves are subdivided into two parts, where we have the general reserves and specific reserves. So anything I talk about general reserves is the same thing as revenue reserves. So whenever you see revenue reserves, this revenue reserve must be on the debit side of the P&L accounts. Must be on the debit side of the P&L appropriation accounts. P&L appropriation accounts. Now, to treat this, if general reserves or revenue reserve, or let me use the word general reserves. The general reserves, if they are given in questions, they are to be treated like that of it has the same treatment like that of depreciation. It has the same treatment like that of depreciation. When general reserves is only given in the trial balance, that means such general reserves will not appear in this account, will not appear in the appropriation account of a limited liability company, but you only go straight to the balance sheet on the left hand side. On the left hand side, under reserves. under reserves. But once, if what general reserves is given only in the additional information, what will you do? The general reserves there will be put in what on the debit side of the appropriation accounts, as you can see here, and at the same time it will appear on the left hand side of the balance sheet under reserves. But if general reserves are given both in the trial balance and in the additional information, what will you do? There are two steps to take here too. So the two steps you are going to take here are step one. The step one is that the general reserves given in the additional information will be posted to the debit side of the appropriation account. And why the addition of the general reserves in the trial balance and the general reserves in the additional information, the addition of these two will be taken to the balance sheet under reserves on the left hand side of the balance sheet. Now, that is all for general reserves and its treatment. Now, talking about dividend. Dividends could be given in two ways. Can be proposed or final dividend or interim dividend. When we say interim means the dividend that has already been paid by a limited liability company to the shareholders. And why the proposed or the final one? They are the dividends that are yet to be paid but has been approved by the board of directors to be paid to the shareholders. That means it has been approved, but the money has not yet been paid out. So that means it is what the company owes the shareholders. So whenever you are giving the and usually interim dividend or proposed dividend or final dividend is usually given in the additional information. You can't see proposed or final dividend in the trial balance. So it's usually given in the additional information. And why the interim dividend is usually given in the trial balance. So whenever you see the word dividend on the debit side or the debit column of the trial balance, it means interim dividend. Both interim dividend and proposed dividend are usually they both appear in on the debit side of the appropriation account. But interim dividend will not go to balance sheet. It's only the proposed or the final dividend. And that is why you always see in proposed or final dividend in the balance sheet under the current liabilities, as you can see here. Okay, good. So that is all about the dividends. That's all about the dividends. Now, goodwill written off may be given in a question. If goodwill written off is given, surely you should expect what goodwill to be given. That is, the goodwill at cost is expected to be given if goodwill written off is given. And the goodwill written off will be on the debit side of the appropriation account, and at the same time it will appear in the balance sheets, and where it will be subtracted from the goodwill at costs. Yeah, as you can see the goodwill. So adding being we have goodwill written off, you are going to write less goodwill written off under this goodwill. So when you get the difference, and that is your net goodwill or the net value for goodwill. Then after that, we have the preliminary expenses written off. This preliminary what expenses written off, or the other name for preliminary here expenses, they are the formation expenses or the pre-incorporation expenses. These are the expenses that are incurred by the limited liability companies while trying to register its business at the beginning of the business. So preliminary expenses written off will be on the debit side, and at the same time it will appear on the asset side after your current assets. Okay, now after that, so you now add up all these from the corporation tax to preliminary expenses, add all of them together. So most times the net profits and the profit from last year, when you add it together, is usually what greater than the total on the debit side of the appropriation account, and thereby you get retained profits carried forward. Retained profits carried forward. So this will be the profits that will not be shared among the shareholders, or that will not be tampered with until the following year. So that is the end of the appropriation account. Now coming to the balance sheet. In the balance sheet of a limited liability company, as you can see, we have the asset side, the fixed assets, the costs, depreciation, MBV, net book value. So you write the cost of each asset here, and what's the depreciation of each of them in bracket, depreciation in brackets, even the total of the depreciation in brackets too, so that when you subtract these from this, you'll be able to get this. That is, when you subtract your depreciation from cost, you'll be able to get your NBV, net book value. And this total cost here will be closed. The total depreciation also will be closed, but the total net book value will remain open. Okay, good. Then after that, you go straight to the investments. If you are giving, most times they don't give students. I've not seen. Not that I've not seen, but it's not common to see quoted investment and unquoted investment in questions. But let's assume that you are given, then the quoted investment and the unquoted investment will be here, and even shares in group company. When we say group company represents corporate company, or corporate venture. And when we say group company or a group of companies, we can say that it is a collection of the parent and the subsidiary of a parent company and its subsidiaries that have common shareholders and common shareholdings. So in this case, what we are saying here is that we can use Dangote Group as an example. The owners of Dangote Group are the same owners of Dangote Flour, Dangote Cement, Dangote Sugar, and any other subsidiary companies that are under the parent company called Dangote Group. So all these investments, the shares in the group company, loan to group company, all this will be on the asset side of the balance sheets. Then after that, you have the intangible assets. You have the goodwill, the patent, the copyright, the development costs. If any one of these is given, it will be under the intangible assets. Then after that, we have the current assets. We have the stock. The stock is the closing stock. Then followed by the debtors, followed by the bank, followed by the cash in hand, and accrued income, prepaid expenses, bills receivable. All these are your current asset. And then your preliminary expenses, all these will be added to the total total value of current asset, total value of intangible assets, and the total value of investment with the total net book value of assets. All this will be added together and will represent the total on the asset side of the balance sheet. Now, the liability side of the balance sheet, you have the first one, authorized capital. The authorized capital most times is usually given to us like ordinary shares, or is usually divided into ordinary shares and preference shares. The ordinary shares will be given like this. Let's assume you are given 10,000 ordinary shares at 3 naira each. It means the value that will be here will be 10,000 times this 3 naira, which will be 30,000 naira here. Then next, 20% preference shares at 3 naira each. This value will be given to you in the balance sheet, in the trial balance. So you write down the balance, you write down the value. So you add the two together and you write the total here, and you must close it, because we don't usually add the authorized capital together with the other liabilities. We only show it for people to know the maximum amount of share capital or maximum amount of capital that can be raised by the company through shares, and why we have the issued capital. Now, the issued capital is most times usually under the ordinary shares. The number of ordinary shares is usually less than or equals to the ordinary shares in the authorized capital. So you can't see ordinary shares where you have 12,000 ordinary shares like this, when you have 10,000 ordinary shares in the authorized capital. So in this case, you do it like the way I told you, 7,000 times 3, and you put the amount here. Then you write all this and add this together, and that will represent the total issued capital. The next is the reserves. The reserves, here you have the retained profits. Remember that retained profit here, this retained profit for the year, for this current year, this one will be in the reserves. And then share premium. Now, let me just quickly come in here. As I said, that reserves are divided into two. We have the revenue reserves and the general reserve and the capital reserves. This share premium is a capital reserve. Example, revaluation reserves is a capital reserve. Capital redemption is a capital reserve. These three will only appear in the balance sheet under reserves and nowhere else. It will not appear on the debit side of the appropriation accounts because they are capital reserves. But retained profits, general reserves, they are what we call revenue reserves. That is why you can see them on the debit side of of the appropriation account of a limited liability company. So coming back to the reserves in the balance sheets, you have the long-term liabilities. I'm done with the reserves. So you add up all the reserves together and you put them here under the total value representing the issued share capital of a limited liability company. So you have the long-term liabilities, 5%, write the value. Then after that, you now list your current liabilities: bank loan, overdraft, trade creditors, bills payable, accrued expenses, prepaid income, taxation, proposed or final dividend. All these will be added together and representing your current liabilities. You add them together. So you later see that the total on the liability side of the limited liability company of the limited liability company's balance sheet will be equal to the total on the asset side of the same balance sheet. And that will be the end of today's teaching on the conventional format of final account of a limited liability company. Good day.